Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 28th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. We see some little weakness here in crude oil. Today was the day I was talking about some good economic data, so let's start going over that. Here in the not so much really across the pond so far, but later on in about 30 minutes from me getting done here, we're going to be having a couple of Bank of England governors speaking. We've got Carney speaking, and they're also releasing the financial stability results, which could be a market mover. It's basically based on the bank stress test results as well. So all of that stuff is going to be coming out here in the next probably 20 minutes or so. And then we also have Fed Governor Powell speaking here in the United States later on. But what have we already gotten? United States, we got the preliminary GDP results coming in at 3.5%, lower than the expected 3.6%. So we're not really seeing a whole lot of robustness and follow through from some of those tariffs. It's not really looking like it's jacking up GDP necessarily. And then we look at preliminary GDP price index came in at 1.7% in line with expectations. Wholesale inventories came in at 0.7%, slightly higher than the 0.5% expected. Last month's number was revised up slightly from 0.3% to 0.4%. So we're seeing rising inventories. That doesn't really give us an indication of anything necessarily other than that a manufacturer is building inventories. Is it on the expectation of future sales coming into a holiday season? We could expect one to ramp up inventories, but they need to get those inventories offloaded. So that's the issue. When it goes up, it's supposedly a bad situation where they're carrying inventory, but when they expect to move it, then it's not such a bad thing. So it's a really hard economic data point to really look into. I think that it's basically because they are building based on expectations that this is going to be a pretty big holiday season for the buyers and the consumers. I already talked about this. The malls were packed on Black Friday. Supposedly Cyber Monday went off really well. So I think the consumer is strong. New home sales, not really showing the consumer strong there. Came in at 544,000 units sold. Expected to be 593,000 units. Now we would expect new home sales and existing home sales to start waning a little bit with interest rates increasing. Remember, when interest rates increase, people can't afford the same size home that they once were able to afford because of that interest rate increase. All right, so they might be on the sidelines unless the Fed starts slowing down on the interest rate increases. All right, Richmond Fed manufacturing came in at 14, expected to be 16. Lower than expected is not necessarily good. That shows that the manufacturing sector isn't doing as well as we would expect. And finally, we got crude oil inventories coming in at 3.6 million barrel build, expected to be a 0.6 million barrel build, no revisions to last month's number, which was a big beat also, if you remember. So another build causing weakness in crude oil. Definitely looks like that 40 handle is almost a sure thing at this point with these builds that we're seeing. I think that crude oil just has no way of sustaining this right now until we start seeing some, demand for that product. We're seeing a ton of supply and just not demand meeting that supply, which should cause prices to drop. And that's about it for crude oil. Then on to gold futures. They're pretty much unchanged for the most part. We're right there at the point of control, or the very soon to become the point of control that I talked about yesterday. It's stuck in the mud right here at around the 1225-ish area is what I'm calling that point of control. So that is going to be where the most time and volume has been spent, at least most recently. So price is being accepted down there. Not necessarily a good thing if you're a bull. Then bonds. unchanged for the most part. You know, you can look at this, say that it's down 9 ticks on the day, but that can be made up in a matter of minutes, especially if the equities start falling out of bed. But at the end of the day, right in and around where I like to see them, maybe a little bit higher, as that would indicate interest rates aren't going to increase as rapidly as we would have previously thought. So that's the kind of camp I'm in. I think the Fed needs to hold off, let this thing meld a little bit, get the consumer spending, and then start thinking about raising interest rates again. All right, the VIX is unchanged right now, trading right around that 19 handle. It's kind of a mixed bag in the equities, so the VIX is trying to discern, is this going to continue higher, or are we making a top? In some of the markets, it looks like we may resume to the downside. Not really showing up here in the Dow Jones Industrial Average, up 176 points. Got above this 23 Fibonacci level this morning on a pop. That is a good thing if you're a bull for sure. I still am in the camp that it's going to kind of ping around this point of control right around where we opened up this morning. So this move higher is good. I would not really want to see this come back to unchanged at the end of the day. That would not make this chart look very good at all, as it would have like a topping doji here. It's kind of like we have here on that move. Don't want to see that, because if we look at the NASDAQ, it's starting to show up a little bit kind of like that, what we're talking about. It's a little bit higher above the Fibonacci 23 extension. I'd like to see it get above this 23 Fibonacci level, which is on the 52-week basically. And that being said, I would like to see that get above there and settle. Don't really want to see this, because that doji right there is very toppy looking to me. And then we go over to the E-mini S&Ps. They're back into positive territory. They were just in negative territory a little bit earlier this morning. But again, this could look like a continuation here, but it very eerily looks like that last doji that I was talking about in the NASDAQ, where the NASDAQ had a top there with that type of doji. Where was it? Maybe it was on the E-mini S&Ps. But a doji like this at the top, not very good. So that's not what we want to see. We want to see a full green bar to the upside. So a close near the highs of the day would be very good for a technical setup, is what I would say. So we'd like to see some push higher in the equities. And then we look at the E-mini S&Ps on the daily chart. This is what I was talking about. It had just gone into negative territory and rallied as soon as we started talking. So maybe it's my chat that's getting this market bullish. No, probably not. Anyway, so like to see this push upwards and settle near the highs of the day. We do not want to see it really settle near the lows of the day. And I haven't added anything. My account is very close to basically being fully allocated. I want to leave some money on the side for a couple of the earnings trades that are coming up. We got a couple of tonight. I'm not going to play. GES Jeans, I think, is actually going to do well. They missed on their last couple of earnings. But I'm seeing a lot of the millennials running around in jeans that are made by GES. Yes, they are back. My generation was big into GES. That was probably their highlight of their company, was my generation. But those high-waisted jeans are coming back, and that is right in line with GES's style. So I think that the millennials are coming back to GES, and we should see maybe a pop to the upside. I'm not going to play it. I don't like their options necessarily. They don't fall in line with my rules for trading options, so I'm going to stay away from GES. We also have, who else is it? Yeti is another one that's coming out. I'm not going to trade it. Not a lot of option participation in there. Should expect the upside. I think they have huge margins. I mean, there's other products on the market that are half the price and are the same product. You understand, when you go to China and have these products built, you just slap your name on it. Well, Yeti, because they got the name brand recognition, can command a little bit higher profit margin and charge a little bit more just for their name, okay? It's not any different of a product basically than you can go out somewhere else and find it, all right? But they are able to charge you more. Just like with my water thing here, this is like a Yeti. It's built exactly like it. It's not produced by Yeti. It's a Walmart off-brand. So there are other comparable products out there that you could substitute for Yeti. So, but you know, they have it, and you might as well run with it when you got the consumer loving your product just for your name. And that's about it. I'm not going to trade any of those. I'm going to kind of wait out. I've got a lot of my positions are moving in the right direction. As you know, I am almost fully allocated to a bullish move, other than my Under Armour trade and Tesla. Those are the only negative deltas I have. Other than that, I'd like to see a little bit of a pop and some volatility come out right now so I can get out of some of these trades. Very close. Still working the Caterpillar trade that I was working yesterday to get out for about 60 cents. Last I checked, it was trading 70. So, or 55 cents is where I'm working it at. And I'm trying to get out of the Dees 110 puts that I originally had sold for $1.22, I believe. It's trading around 60. I'm working a 55-cent bid. All right, so might be able to get those by the end of the day. That's about it. Other than tomorrow's webinar is going to be a real good one. I'm going to be talking about diagonals and how to isolate some of this volatility we're seeing across the board. Getting a little bit of pop here in Bitcoin. That's not the chart I was looking for, but getting a little bit of a pop there. All right, so check out my diagonals. That is going to be a great way to, I'm going to show how to isolate volatility. So if it goes up or down, it's not really going to affect our strategy. So go to protraderstrategies.com, sign up for that. Also give me a thumbs up, thumbs down, like or dislike. If you give me a dislike, let me know what it is that I can change to make you like it a little bit better. All right, so if you can't take that, take it easy.